Morning, Steve here in Chicago with the morning grain comments. Well, here in the U.S., most of the Midwest got a good rain over the weekend. There's more rain across parts of the western Corn Belt down into the southeast. So that's good recharging the soils for next year. The next 2 weeks looks like a combination of, at first, normal to above temps and maybe normal to below rains, and then we go back into the same pattern where we have maybe normal rains in the second week of the forecast. South American weather is right now deemed okay. Overnight prices are a little bit lower, crude's lower, and so you have a little bit of a flare of deflation with the dollar a little bit higher. This week we have the Fed coming out with their action. We'll see if they raise rate, if that's puts pressure on the financial markets. I think the key is whether or not they give a higher range for down the road for more increases in interest rates. As far as the ag news is concerned, the USDA last week put out some numbers that shows what they think the supply and demand for corn, beans, and wheat here in the United States is going to be out to the year 2025. Now, this is not an official number from the World Outlook Board. It's just numbers from the chief economist for budget reasons. But to kind of look at the numbers, they expect that the U.S. corn yield is going to go from 171 up to 185, almost 186 by 2025. They also expect demand to go up a little over 1 billion bushels. So in retrospect, if the demand doesn't go up, then we need to plant 5 million less acres than we are right now. In the soybeans, kind of a similar picture. They expect yields to go from 47 to 51 and demand to go up 200 million bushels. If that demand doesn't go up, we probably need to plant 4 to 5 million less acres than we do right now. The other news was that Argentina, the president announced he is eliminating the corn and wheat export tax and lowering beans from 35 to 30%. Still, the key to the market, especially beans, is what they do to the currency. It sounds like they may be slower than the market what it thought in dropping their currency, which could slow some of the farmers' selling pace. To kind of give you an idea of what's going on, in the world we plant about 176 million hectares of corn. China's number one at a little under 38 million hectares. U.S. number two at around 32.5 million acres. Argentina is only 2.3. By lowering their export tax, they could increase their acres, and the most they planted was in 2012 with almost 5 million hectares. Over in the wheat, they're a small player in wheat. We plant worldwide about 224 million hectares. Number one is the FSU, number two is India, followed by Europe, then China, and then the United States. They only plant about 3.5 million hectares. The most they planted, though, was back in 2004 at 6.5 million hectares. And in the beans, again, you have to remember that probably Argentina still has a lot of pasture land that they don't plant. We plant about 122 million hectares worldwide in beans. Number one is Brazil at 33.7. You got to remember, they probably still have more acres that they could plant to beans. We're number two at 33 million hectares, and Argentina this year is expected to plant a record amount of 20 million hectares of soybeans. So a little bit choppy trade, a little bit lower outside markets. Commodities are lower, dollars higher, and we'll see what the Fed does this week. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.